This is Mark Anthony with Mercury Time Price Analytics. Thank you so much for taking the time to watch this video. Now, what we're going to do on this video is something we have not done before, and that is take you inside the same live chart that our members see all throughout the day session, all throughout Globex. Just this interface alone took over a year of development to get it exactly the way we wanted it. Now, why did it take a year? Because these are the same algorithms that institutional trading firms use. The only difference is they've got the output for those algorithms over dozens and dozens of monitors. Well, the typical trader doesn't have a dozen computer monitors on their screen. So we wanted to put everything on one screen, and we absolutely needed to create an interface that's very, very easy to use. Now, to prove that point, we had my 14-year-old daughter who obviously has never traded before, and we had her watch the same tutorial videos that we provide for our members. It took her about 2 hours. And then I asked her to explain what these different panels are and how they work. Absolutely no problem. Depending on what time frame you like to trade on, you need different types of information. And we provide all that on one screen. So if you're a frequent day trader, you like to trade in and out throughout the day, you need a specific data set. If you're the type of day trader that's just looking for those one or two highest probability trades during the day, you need a different data set. If you're a swing trader, now there it gets a little tricky because there's quite a few different subdivisions of swing traders. You've got swing traders that are just looking for multi-day moves and then close positions on the weekend. You've got swing traders that are looking for longer positions, multi-weeks, and then you've got swing traders that are looking for what I would term as intermediate trades, the big chunky trades where you can let them run in this tape 100, 200 handles. Everything is on one screen. We're going to give you a look at each one of these panels, but let's start at the longer term end of the spectrum, and we'll work our way down. For our intermediate trading folks, the automated algorithm has been long, where is it, in here, since about 3228, and here we are trading 180 handles higher. This video is being recorded on August 29, so on Friday, S&P closed over 3,500. If you're looking for those big trades, it's very simple. Now, you see some choppiness here. The algo triggers here. Well, what this purple hash is, or dash, this is where you lock in that first piece of profits. Comes down below the momentum algo, then you're out of the trade. It gets long again here. Here you're locking in profits. You lock in more profits there. And you can continue to keep that long position if you want, until you get a test of the trend algo. There's two trend algos here, this orange one and then this deeper one, which S&P hasn't hit in quite a while. But here you have some choppiness. And even if you're an intermediate term trader, you don't want to give the profit back. So we've got the metrics here with the purple dashes and the cyan momentum algo, as well as actually 3 different trend algos. So you can lock in profits so that while you're looking for that trade that's going to run, you're not giving back handles. So you can take those incremental profits, move your stop to even until you get that one that wants to run, and this was it right here. This was right at around 32.52, and this has not gotten out of this long position. It was still long into the close on Friday. Now, we recommended booking most of the profit on these positions on Friday. There's some time cycles that are very concerning coming up. But if you're looking for longer term trading, I mean, this is it, folks. Now let's move down to, we'll go back to our live chart panel. We'll take a look at the swing trading algo. Now, before I do that, you'll notice that in addition to the algorithmic slopes and oscillators and momentum algos and volatility metrics that you have running through the chart, you've also got these fixed horizontal algo pivots. Now, you've got a different set of algo pivots here on the day trading chart than you do over here on the swing trading chart. Because naturally, swing trading, you want to book your profits in wider intervals, easy for you to say, intervals. As a day trader, you want to lock in the profits more quickly. So we've got a number, and we literally have well over a dozen algo metrics, but everything is on the chart in addition to these different data sets, these horizontal lines. So as an example, over here on the swing trade chart, you have our Mercury bands. Now the Mercury bands are recalculated each evening after the full 5 p.m. Eastern close. So between 5 o'clock and 6 o'clock, we're running these algos. And by the way, we never ever put hand-drawn lines on the chart. Everything on the chart is a mathematical algorithm. So here you have the Mercury bands. You've got these 8 core inner pivots, 4 short cycle, 4 long cycle, and then you've got upper and lower extensions. So that's what helps you manage your swing trades. The intraday trades will show you that when we look at this chart. So let's zoom this out. We'll take a look at the swing trade algo. So the two main components here, and we've gone into a lot more detail on actually how this triggers on some other videos you can find on YouTube. But the cyan line is our proprietary momentum algo. The 2 white dashes that appear on each bar, this is our volatility metric, and it's the second derivative of volatility, because volatility in and of itself is not important. It's the second derivative, i.e., volatility measured against itself over periods of time leading up to each one of these bars. So, and we can pull this chart back. Let's go back a little bit further so you can see how long ago this triggered long. So here's when it triggered long, and you're always going to get some choppiness when the trend is changing from down to up. So this is where the algo got short. Now, if you don't like short trading, then you just go flat. But our swing algo got short right here. That was 32, 80, 86, 87. And then you had this nice move down, quite a few handles, about 50, 60 handles. The swing trade algo gets long again. And let me say this, the way this market has traded since March, when the algo gets into swing trades on the long side, they run. And then interspersed between those long runs, you get these fast, violent moves down. So when the swing trade algo is long and it triggers short, if you want to flip short, that's fine. If you want to just go flat, if that's not your bag to trade short, that's fine too. The algo got long again right in here. It was right around 33.61. And up in here is where you're taking profits, booking partial profits when it comes down below the momentum algo. You've got this algo here, another line to take partial profits. Got this orange line to take partial profits. So you can take partial profits and keep the position on, or you can close the position out when the white volatility metrics cross back from above to below. Now, just like with intermediate cycle trading, you're a swing trader, you're looking for those moves that are going to run, and you don't want to get whipped out of the trade every time you get a little pullback, because the thing that makes swing trading so profitable is you're staying long when you're getting these bear trap, not even close to flipping out of it. You can see the momentum, the white volatility metric is nowhere close to coming back through the momentum algo. So here you have bear trap. And actually here you have 2 of them right in a row, and that's what made this move powerful. Once those folks that are looking at this as a time that they want to get short, they get their stops run, off you go again. But the swing trade algo never came close. And what's interesting about this is when you get this pullback, people look at this pullback, and I've mentioned this on other videos before, and if you take a look at the weekly report I wrote a week ago, August 22nd, there's a long explanation of the fact that humans perceive volatility much differently than computers process volatility. Let me say that again. Humans perceive volatility much differently than computer algorithms process volatility. So here you have a move. What is that? It's about a 40 handle move. Now, can you imagine how many people were getting short here? They saw this long run, they're thinking the market's way overbought. It's over 3,400. Here's where they're getting short. Well, this may look like volatility. I mean, you had this move down here to the momentum algo, you bounced up, you came down. That looks really volatile, right? The momentum algo is not what you focus on. Momentum came all the way up here, and now it's just starting to level off, and it's not declining. The slope of momentum in this algo has not rolled over. And notice the two white dashes, the volatility metric on each bar, all they did was compress. And what they'll do when the swing trade algo is consolidating for the next move up is the volatility metric, it'll just compress, and snug right into the top of the momentum algo, and then you get your second leg. So all that happened here, where humans are seeing this as being more volatile, the algorithm is measuring volatility based on all this past data, and vol is actually compressing. And then now here's something else that's interesting. The reason that we put these things like the Mercury bands and the algo regression lines overlaid on the same chart is all this did is come down to the algo regression line, this blue line. Furthermore, you can see right here, this is why we've got these trend algos on here also. You came down and it stopped literally to the handle at this momentum algo. You come over here, it comes down again, and what made this one so nice is this came down a little bit below this trend algo. And without getting into too much detail, or this video is going to run an hour, there were a lot of people that had their stops right under this bar. And then it takes off again. So let's pull this forward. And once again, now here's a spot where the algo flipped short, and you could choose to get short, or you can just stand aside. Now, what made this move here so powerful is what we call a fast flip. Now, each one of these bars is well over 20 minutes, okay? So this algorithm is not designed to flip from long to short to long again that quickly. And so when you see that happen, it's long, it flips short, and it gets long again. That's what we call a fast flip. And when you get a fast flip like that, that second move gets really nasty. So you had a lot of folks that were jumping on this short. Okay, here's the big one. Boom. And then once the algo comes up here and the little white volatility dashes come from underneath the cyan momentum algo, they're underneath, they cross back over, you're long again. And then you have this really long period that went from Tuesday to Wednesday. I mean, it was almost a full day of compression in volatility, and that's what gives you this nasty move. So one of the parts of the secret sauce in this swing trade algo, just like in our day trade algo, is that I've been trading almost 40 years. This is the best volatility metric I've ever seen. Because at times when, again, to humans, we see this price and it seems really volatile, the volatility is compressing for that next move. And then you get this all the way up. So, you know, when the swing algo flips from long to short, if you don't like shorting, you just stand aside, okay? Now, let's take a look at our day trade algo. Now, whereas we've got our Mercury bands here, we've got more granular um, horizontal pivots. Now, this is something that just simply does not exist outside of this system, and that is our Mercury dynamic pivots. Now, these release every morning. The Mercury bands are done at night, and I didn't mention this earlier, just to clarify. The Mercury bands I mentioned, we run those at 5 o'clock in the evening, between 5 and 6 when the market's closed. Because the Mercury bands are long cycle algos, those are in effect all throughout Globex, starting at 6 o'clock Eastern time, and all throughout the next day session, okay? So these Mercury bands run for 23 hours. The algo horizontal pivots that we've got on the day trade chart, these are calculated in the morning. Now, I'll let you in on a little secret. Institutional algorithms are built on what I refer to as multi-time cycle analytics. Now, you can't build repeatable, reliable, accurate algorithms based on price. Yes, price is part of the formula, but the reason you can't build algos on price is right here. Price is a vertical axis. Hypothetically, it starts at 0 and goes to infinity. How can you anchor a repeatable algorithm to something that is a straight line from 0 to infinity? You can't. And that is why, and let me caution you here, there's some good system builders out there. There's also a lot of them that are not good. And more often than not, what they'll do is they'll build an algorithm and then they'll back test it over a period that shows that it works, and then say, look, our system returns X% in such and such period of time. And then you invest $10,000, $20,000 in a black box system and find out it doesn't work. Because if it's not anchored to time cycles, if y'all have heard of a fellow, I think he did a little bit of trading, his name was W.D. Gann. Gann pioneered the fact that time is more important than price. Now, why is that? Because whereas price is purely linear, okay, time is both circular and linear. Look at a clock, it's round. There's the same number of hours, minutes, and seconds in every day. There's the same number of hours, minutes, and seconds in every trading day. But yet at the same time that time is circular, it's also linear. And what I mean is you can't stop time. You can hold your finger on a clock and stop time, but you can't stop time itself. Time doesn't go backwards and it doesn't stand still. So you have a function of time that is both circular and linear. Now, what did Gann say? Take a circle and a square and a triangle, put them all together, and you'll start to understand the dynamics of time. That's what our algorithms do. They're based on time. You do have the price component, and you also have the horizontal algo pivots that allow you to take profit. So this is what the algos look like. And when we output this data, just like we do with the Mercury bands, we provide the data sheet to our members. And this is just the one from Friday the 28th. Now, we don't put all these levels on the chart. We run all these levels because when we run the algo in the morning, we don't know which are going to be the important ones that need to be put on the chart. But for example, we always put the trend confirmation pivot, the backtest pivot, these longer cycle algos, the swing trend pivot, as well as the X5 pivot. Now, the X5 pivot is a key institutional algorithm. This algo, the X5 pivot, the cycle per bar is over 6 hours. One bar on a price chart is over 6 hours because the institutions aren't concerned about day trading on 5-minute bars. And by the way, we don't use 5-minute bars in any of the algorithms because 5 minutes isn't an algorithmic time frame, nor is 10 minutes, or 15, or 20, or 30, or 1 hour, or 2 hours. If you're looking at those chart time frames per bar, you are not seeing the same things that the institutional algorithms do. And let me just segue to that. But just to finish this thought, we publish this for our members, but the relevant levels we put on the chart, so members don't have to worry about that. But just to give you an idea what I'm talking about, I mentioned that if you're looking at 5-minute, 10-minute, 15, 20, 30 hour, you're not seeing what the algorithms see. You want to see what the algorithms see? This is what the algorithms see. And I'm not going to, there's a whole video about 30 minutes that we posted today on YouTube just on this chart alone. But this is what the algorithms see that you don't see if you're not using algorithmic timeframes. And it's not as simple as just finding those timeframes. There's much more to that. But just at its most basic, you're not seeing what they see. And I'll just give you a quick example. You've got two trend algos, these two orange algorithms. And then you've got this purple line, which is what's called an acceleration algo. We're not going to get into that right now. But here's your bottom where the trend turned up right here. All right. Now, can you get any more accurate than this pullback to the trend algo? Or this one? Or this one? This got a little choppy. Or this one? Or how about when you had this long consolidation? Consolidation right here at the dashed white algo. Now, these are the primary day trading algos. The solid white one is a longer cycle than the dashed white one. So when you had this long consolidation, you had this choppy volatility, and where did it come down to? Right here where this shaded oval is. Again, there's a whole video that runs over 30 minutes just on this chart alone. This is what the algorithms see, and this is just part of it. This is just defining where the pullbacks are. And we're going to show you a little bit more on this chart in a minute. So let's take a look at our day trade algo. Now, this has gotten choppy over the last couple days. And when it's choppy like this, even a day trading algo as accurate as this, and if you've got one that's more accurate, I'd love to see it. But you get choppiness. Now, you can trade this with the dynamic pivots. Now, the Mercury dynamic pivots, that's what I just showed you right here. All right, we put this on the chart. And the reason they're called dynamic pivots is because they have these descriptive names. And what's amazing about this algorithm, and I absolutely sincerely believe that this does not exist even at an institutional level, is when we run these algos in the morning, not only does the algorithm give us the price level, but the algorithm also gives us a descriptive name for the expected price behavior when it gets to that level. So, for example, and we didn't have a whole lot of movement here on Friday, but just as an example, price comes up here, and this algo is generated about 2 hours before the market opens. All right, so this level here is the tick point of control. You get your first move down right here. Now, did it go a little lower? Yeah, it went right down to the multi-day trend short cycle algo. And then you get this choppiness, and it comes through the multi-day trend algo, and what does it do? This purple line here, which hasn't been touched in a while, this is the key trend algo. Now, just like we showed you those orange trend algos on the other chart, this is the equivalent, this one and this orange one here. So when you break through this, and here's that long consolidation again, but if price breaks through the orange algo, nothing's turned down unless this is broken. And so on Friday, what gave you this move into the end of the day? Price came down right into the purple algo, which is right at about 80. It's right about 81-ish, and then you get 20 handles into the end of the day. Now, the one algorithm that is on both the swing trade algo that we just looked at, as well as the day trade, is the daily bull bear pivot. If all we gave you is the daily bull bear pivot and none of this other stuff, you could trade the lights out of this, because the daily bull bear pivot, it's unique every day, hence the name. But that is the fulcrum price level that determines the bull bear polarity, if you will, all day long. Now, we did really well shorting on Friday, and you're probably thinking, well, it didn't move down that much. Well, it didn't need to, because we were getting short here and then booking profits here and here and here. And then it came up above the daily bull bear pivot again, came below, we got short, and we booked profits on this line and this line again. So just generally speaking, when you're day trading, you have to lock in profits quickly and then continue to lock in profits as the trade moves in your direction, and then you trail a stop. So, I mean, we had an awesome day on Friday shorting a market that didn't want to go down. And that's where the risk management aspect of our system comes into play. You can trade long, you can trade short and be profitable as long as you have good risk management, especially if you have algorithmic risk management, which is what we have. But I don't care how good a trend follower you are. If you don't have good risk management, your results are going to be unpredictable. So the automated algo works the same way. So down here, you have the momentum algo, which is going sideways. It turns up, and along with it, you get the white volatility metric, which, if we look closely, was underneath it right here. It crosses up, and then you get this nice move. Now, here it triggered short, and if you don't like the short, you just get flat. And then while everyone is playing for the short, the automated algo gets long again here, flip short here, and again, if you don't like your short, you just stand aside and wait for the next long trigger. And that last long trigger on Friday, got you another 15, 18 handles into the end of the day. So the combination of the automated algo, the trend algos, orange and purple, and the horizontal pivots, that is everything you want on one screen. As Gan said, it's a circle with a triangle inside of it, with a square. Square, circle, triangle, all on one chart. That's why we give you the automated algo and the trend algos and the fixed horizontal pivots. Doesn't get any better than that. Now, I'm going to save these two for last. Before we go there, this cycle here. Now, I mentioned our swing trade algo, and I'm not going to give you absolute specifics. Our day trade algo per bar, this is more than 10 minutes per bar. This is more than 20 minutes per bar. Day trade, swing trade. Down here below it, we have a very important pivot. This is called our intermediate cycle matrix pivot, okay? And each one of these bars is over 2 hours. Now, if I pull this chart back, can you see how this trends? And when it breaks below it, you get long again when it comes back through. Breaks below it briefly, recovers it, and that's the way this works. And that's the way this market has been functioning lately. You get periods of beautiful move where it doesn't even come anywhere close. You get your back test right here directly, literally to within a couple ticks down into that purple hash and then up again. So look, in this metric, the reason we put this right underneath the swing trade chart is the swing trade chart has a version of this also. This is the matrix pivot on a swing trade chart. Now, again, I don't want to flip back and forth, but while we're talking about it, swing trade algo gets long right here. Notice where the first pullback came literally to within a couple ticks, matrix pivot, back up, pull back here to the matrix pivot, back up, matrix pivot, and then you're gone. So this purple hash right here is an algorithm all by itself. So if you're a swing trader, it's real simple. When price is below this pivot, the matrix pivot on this chart, when price is below it, you're either short or you're flat. When price is above it, you're either long or you're flat. Easy. Again, this looks very complicated on the screen, and the math that's underlying it is immensely complicated. But the algo could not be any easier to use. So here you have, and again, this gets to why we've got things laid out the way we do. Here's your swing trade algo, automated algo, but even more importantly, your matrix pivot on your chart. And then this is the same matrix pivot applied to a chart where each bar is over 2 hours. Now, it's not normal to get this kind of choppiness that we saw on Friday. Is that Friday? Yeah. And folks, that in and of itself is a warning sign, and that's not the scope of this video. That's not good. But if we pull this back, I mean, you can see the way this trends. Look at that. You get these pullbacks, and every once in a while you get a flush like this, and then you're off again. But that is a beautiful trend following algo right there. Now let's talk about our short-term folks, and we'll save our newest developments for last. Now, when you look at this chart, what do you see, folks? What does this look like? No, it doesn't look like a whale about to close its mouth. Here you have just a standard 5-minute Bollinger Band, mid-band, upper band, lower band. Now, there's more to this chart than that. The reason we provide this metric is because a lot of traders have traded for years using 5-minute Bollinger Bands. There's just one problem. If all you're using is a 5-minute Bollinger Band, you get whipsawed a lot, right? So price is underneath the 5-minute Bollinger Band and it comes up through and you get long and then it reverses. Or price is above the 5-minute Bollinger Band, it crosses down through, you get short and then it reverses. What we've added is 2 very important algorithmic metrics. On each bar, you've got a red hash, you got a white hash. A little bit smaller, so it's easier to distinguish. And it's real simple. Algorithmically, when the red is the baseline. So algorithmically, when the white hash on each bar is above the red, the buyers are in control. When the white hash is below the red, the sellers are in control. This orange line is a mathematical equivalent as close as we could get to the matrix pivot here. Now, I mentioned earlier in the video that 5 minutes is not an algorithmic time frame. So this doesn't track to the penny with the matrix pivot here, but it's pretty darn close. Now, let me give you an example of, exponentially better your returns are going to be once you add these 2 algorithmic metrics, if you're one of those folks that likes to trade 5-minute Bollinger Bands. So let me just slowly pull the chart back. All right. And let's see. Okay, so here's a good example. Price is above the Bollinger Band, comes down, you go to the lower band, and you get this nice, long green bar. And you're thinking, yeah, baby, this is going to reverse. Above the Bollinger Band, we're getting long. Well, here's the problem. Price came up through the Bollinger Band, but the sellers are still in control. White's below the red, okay? You come down here again. This time you pierce the lower Bollinger Band. We'll pull this forward a little bit. Now, this time, and there was another head fake here too. You have this move up once again, and this one looked pretty tasty too if you're wanting to get long, right? That bar, 5-minute bar, started at 34.89. It's about a 5-minute, 5-handle bar. Up through the Bollinger Band, again, back below. Now, what happened this time when it came above? Now the white is above the red, and so even though it comes up here and does this time it's going to hold, and there you go. There's one other example in here I wanted to show you. Let me see if I can find it. It was late in the day, Friday, I believe. Let me go back a little bit more. If we can't find it, I'll move along. Back just a smidge more. Yeah, I'm sorry. I thought there was one more. So it provides that confirmation. Oh, by the way, the other thing I wanted to mention is, let me go back here. I'm sorry to get a little disjointed here, folks. Okay, this is what I wanted to show you. You've got the two algometrics on here. You've got the white and the red hash, and then you've got this orange equivalent metric to the matrix pivot over here. So you got this move up. This is one we were looking at. I just forgot to mention what the orange algo is. So you get this move up. Now it did go above the orange dash here. It did go above the Bollinger Band, but again, sellers are still in control. You come back down, and this time you come up above, and you've got everything working for you. Right here, you see the algo equivalent of the matrix pivot. See where that algo itself crosses through the Bollinger Band? That's where you get the really nice move. So I believe this was Friday afternoon around 2:30, was it? And that gives you up into the high, about 14, 15 handles. And it likely would have ran further if we didn't come to the end of the week. All right, same thing over here, 5-minute Bollinger Band, but here we've got the white and the red metric running on a tick chart. Okay. Now, let's take a look at these over here. And I showed you this briefly before. I want to pull this back, and again, there's a 30-minute video on YouTube from today, so I just want to give you a quick Reader's Digest version. What you have on here is a fast algo, which is this purple line. On the other end of the spectrum, you have two trend algos. Trend algo 1, trend algo 2. Trend algo 2 is a longer cycle, and it moves slower, obviously. You can see the slope is more gradual. And then you've got these two white algos that will give you sort of more of an intraday look within the day that will move faster than just these trend algos. So what you have here, and anytime these algos are going sideways, you've got the dash white one going sideways, you've got this white one going sideways, and you have the fast one really choppy. Well, those are times that you probably just want to stand aside. And what happens right here is the fast algo comes up here and it peaks like an inverted V, and it really violently crosses down through both of the white algos. That gets in. Let me zoom this in a smidge. And again, this is all on that video that I recorded earlier today. So the fast algo comes down, and by the way, it came through a regression line too. The horizontal fixed lines, those are algo pivots. The straight lines that are angled, these are algo regression lines. And when you break these, they get nasty. Here, here, and here. I mean, you don't want to play with those things. So what you get here is is double trouble. You have the fast algo not just crossing down through the regression line, but crossing down through both of these white lines. And when these algos get close together, when you have confluence, when they get close together and price breaks either strongly from below up and through or above down and through, that's what gives you this kind of stuff. Now, the cool thing about our system is, let's say you got caught long here. You walked away from your desk. Maybe you didn't have a stop in, and you come down and you see this. Well, you don't panic. I mean, you'd want to trim, but you got to pull back right here, right to the purple algo. Purple algo falls all the way down. Now, what happens after that? Fast algo turns up. Next in line is the dashed white algo. That stops going down, goes sideways for a bit, turns up. The slower of the two white ones, that turns up. And here you've got the trend algo 1, goes sideways. Now this moves slowly. And I'll tell you what the significance of this is in a minute. But notice when all these turned up, you came back down here, it held at the second trend algo. Now, once this held and it came back up, you had remember what I said a minute ago about clusters of algos, 1, 2, 3, 4, right here. So when price goes through clusters of algos, doesn't matter what direction, boom, just like it did here, you went right down through 3 of these and you got this nasty move down. Here you went up through 4 of them and you got this blast off. Now it came back down, and where did it stop? Mercury band to the tick. The Mercury bands for NASDAQ are done once a week on Sunday. So imagine that. You have this level of precision on an algo that was calculated before the week opened. Then you get this move up, and you come down, you stop right there, comes back up, and you can see the whole structure rolls over. And that's where you got to be out of the trade, when it comes back down through that. And if you didn't get out there, you came down to the regression line, had one little back test to give you a chance to get out if you were long or to go flat. Now, it comes down here, and then, big time bear trap, and then it goes again. Nice move. And what's cool about these algos is they give you early warning. All right? Take some partial profits here. Take partial profits here if you're long. Take partial profits here. But at this point, once you see this kind of action, these crossovers, then you want to be out if they didn't trigger your trailing stop by that time anyway. But here you have a move down here to the orange, same thing. Now, folks, I got to tell you, after this, is this a blow-off top here? And again, this video is being recorded Saturday, August 29th. Is this a blow-off? I'll tell you what, if you were long after this nonsense, and look, the algos told you that there was more to this. Comes back, settles down. And when the algos are moving upward, now even though, just take this white dashed line, this is basically going sideways, right? But compare it to where it was here. This is just a consolidation. Everything is still angled upward. And then you get this last pullback to the tick. I mean, literally to the tick, to this algo, and then it goes up. Now, if this is the first video of ours that you've ever watched, and you heard me make that statement in the beginning that these are the same algorithms that the institutions use, can anyone argue with that? I mean, here's the bear trap. This is institutional support. Boom. You come down here again. Same thing. Now you're doing it with this algo. And all over again. Now this is not good. Consolidations that want to consolidate for the purpose of moving higher don't usually look like an EKG gone haywire. So not making any predictions, but this is getting a little dicey up here. And we've got today's the 29th. There is a key cycle turn date, which is Sunday the 30th. And I shouldn't even have mentioned that because now I have to tell you the rest of the story. I don't like putting out on Twitter when there's cycle turn dates, because here's why, and you probably already know what I'm going to say. The institutional algos know when those cycle turn dates are as well. And in this tape, more often than not, on cycle turn dates, instead of the market rolling over and going down, they will rip this thing higher and give you just a face-ripping short squeeze. Now, that could be the case on Monday, August 31st and into next week. But this particular cycle has some attributes that we have not seen in a while. So if you're watching this before August 31st, be careful. And look, in this kind of tape, you got to be careful whether you're trading the long side or the short side. All right, last thing we want to show you. This is our Saturn GT predictive algorithm. You can find a standalone video for this. I actually recorded two of them. One of them has a picture of the black, one of the 4 GT40s that ran at Le Mans. I think that might have been the one that ran in '67. I'm not sure. And then there's a second video that shows a red, I believe it's 2021 4 GT40. That's the one you want to watch. When I did the video for the one with the black GT40 on it, I had just finished this algo that day, and I was so excited about it. What was supposed to be a 10-minute video ran an hour, so I re-recorded it. The one with the red GT40 runs, that one still runs like 20 minutes, but this is state-of-the-art because this is what's called a predictive algorithm, because what you're looking at here is the third and fourth derivative. You're looking at the slope themselves. You're not taking action when price comes into these lines. You're using the slope itself as a vector for future support and resistance areas. And again, there's a whole video about this, but just as one example, you see right here where the fast algo crosses through. It's right there. Well, after it comes down here, you've already drawn a vector from here to here, and that's where it fails. Now, where do you get price acceptance? When it comes back above that vector. So what you're looking for on this chart is you're looking at peaks in these slopes, troughs in the slopes, or where they cross over. So, and I'll just give you a couple real quick examples of this, because again, there's a whole video on this. Let's pull this back a little bit. So we start getting this choppiness. All right. And you can see where this broke down. Now, why did this break down? We'll take a vector, meaning put your cursor at the peak of this slope, of the purple algo, and where does it break down? Right there. All right. Now, take this spot here, where the purple algo crosses through this one. And this is where you come back up. There's your support, comes back up again. But again, where this breaks, you get another move down. Let me show you a good example of a crossover here. And it's as far back as we can go. The other thing you look for here is, in addition to the peaks and the troughs of the slope, you look for spots where they get real close together, like right here. Here you've got the purple one. It gets right down, and when I mean it gets close, I mean it gets close and it doesn't cross through. So you take this spot here, put a line right there, and that is exactly where you had this flush and then this move back up. And what's interesting is on this day, that's where the Mercury band was. So again, you take this spot here where you don't get the crossover of purple down through the white algo, and you take where the bottom of that little slope is, and what you do is you draw the line forward. So when you see this, you say, okay, well, it came down through a vector drawn off the trough of that slope. Where is it going to slingshot back higher when it comes back up and through? So it's very, very, very simple to use, but this is what's called a predictive algorithm. And so you use the slopes, the third and the fourth derivatives of these, the slope and the fourth derivative is the crossovers, to tell you where important prices are. And we'll just give you this last one right here. It literally comes in right there. So when you lose this and you come back above it, then you get that little scoot higher into the end of the day. Now, folks, we've still got other algorithms that we haven't shown you here, but what I wanted to demonstrate for you is the fact that it doesn't matter whether you're a long-term trader, an intermediate term where you're looking for these multi-week, sometimes multi-month moves, or you're a swing trader or a day trader, or a combination of like intermediate trading and swing trading, which is what you get here with this. I mean, look at this trend. This trend started down here, 33.80, 120 handles later, all the way down to folks that like trading off 5-minute bars. Everything is right here. And we're very proud of this interface. Like I said, it took a year to get this right. Because when you've got all these algorithms, we don't ask our members when they sign up, well, what kind of trading do you like? Oh, okay, you're a swing trader. All right, watch this computer screen. Or you like to day trade. All right, here's this computer screen. Or you like to frequently intraday trade off the 5-minute stuff. Okay, here's this one. It's all on one chart. And I'm on the mic all day long, so as things are developing, we pull those charts out, show you full screen. It's all right there. You've got a Slack channel where we post all these charts. There's a whole video that I recorded just on this panel right here. If you want to get a hold of me, our website is mercurysignals.com, Twitter @MC2085. There's my email, markanthony@mercurysignals.com. If you haven't been to our website, mercurysignals.com. And one of the things that we're very proud of is there is no website that sells trading subscriptions or trading metrics that puts as much information right up front for public access on their website as we do. I guarantee you that. You could literally spend an entire day just looking through all the information that we put on our website. So we just choose to run our business that way. We will never be the kind of firm that just gives you enough information to make an impulse purchase that you might regret later. So if you haven't been to our website, please visit it. If you're already on our website, we thank you for watching this video on our website. We appreciate your time. Most importantly, God bless you, God bless your family, and we hope to see you again soon.